In the past 24 hours alone, nearly 30,000 traders were liquidated with a total combined liquidation value at nearly $100 million. The largest being around $2 million on exchange OKX. In today's video, I want to look at failed trade signals as we may be coming up to a very significant one for Bitcoin. We can look back at history and see how we can trade these, why do these occur, and how you can make money from a failed trade signal. Identifying these failed trade signals can be key to understanding where the market is going next and, of course, how you can profit from this. Bitcoin may just be setting up for one of these failed trade signals. Time's going to tell, but I want to show you what it is that we're looking for in the chart right now and identify where this market could go from that point. You know the drill, like and subscribe. And no, you didn't just get YouTube Premium. There are no ads on this video as today's video is a sponsored video. So use the timestamps in the video description to skip around to what you want to see next. So let's kick it off with failed trade signals. These are some of the best signals that I've found in the market so that I can understand where the market's going next and how I can profit from it. It gives me confidence on what that next move is. And I'll show you specifically in the Bitcoin chart, the macro view here on how I was able to get into Bitcoin in a heavier load in 2020 as I saw a massive macro signal breaking, something that we could be experiencing right now at this level of $25,000. So a failed trade signal is one of the best signals. I know everyone looks for double bottoms, double tops, and for those to play out, or head and shoulders patterns, or any sort of indicator or oscillator. But seriously, if we've got a signal there and that signal fails, this could be some of the best trading coming up. So in terms of a failed trade signal, if we're smart, we'll cut our losses. We'll change position to the other side of the trade. You see that trade signal come in, it doesn't work, you have to pivot. Now, before we confuse the guys who just read the headlines of videos and jump straight to the comments section, no, my position of the market hasn't changed, but I don't want to spoil the ending of the video just yet. I want to look at these trade signals and how they have been extremely profitable and able to call the direction of the market. So why try and find another trade signal when a failed signal is a legitimate signal on itself? Failed signals are probably the most reliable of all, and sometimes they just may be our best choice for winning trades. Looking at the liquidations from the last hour, we can see that the majority of them have been shorts. That's obvious because Bitcoin at this point in time is rising. On the hourly chart, we've got a green bar, and another green bar. And so these failed signals, or at least these failed traders trying to short the market on the way up, are getting liquidated. And we can see that in terms of how much they're actually losing in the last hour, about $3 million. So nothing crazy like some of those massive days we saw earlier in January where the shorts got absolutely destroyed as Bitcoin bounced through key significant resistance levels, but nonetheless, they're still on those losing streaks. So trying to use these failed trade signals, trying to short the market when you should be going long is going to be a key area for these guys. And looking at this on a more macro term time frame, let's take a look at where we currently sit and where this signal could be used. So the Bitcoin price is currently at $24,000. We obviously know that there was a key level here in August of 2022 at $25,200. And so far over the last week and a half, Bitcoin has struggled to break through $25,200. Each of the occasions it did climb slightly above it, only by a few bucks. And so this has led many of the bears and the short traders to try and short this opportunity every time Bitcoin has risen back up to the 25.2. Now, depending on the time frame that traders are shorting, they can be making some decent gains to the downside, but it's going to have to come on extremely high leverage depending on how short they are. And so with any move to the upside, they could easily get liquidated. And if they're too highly leveraged and can't get out of the positions on time, we know that that can lead to a significant short squeeze, which then pushes prices even higher, faster, gaining traction towards those next resistance levels. And of course, if there are too many short, it doesn't take too much for it just to push it that little bit higher and cause that squeeze. Now, the key level that many crypto traders are looking at is, of course, the $25,000 level, which is creating the old double top. But while the market remains at these higher levels, and if it stays here for a longer period, it essentially is consolidating, especially if it is consolidating above previous resistance levels, closing above key resistance levels. This is all forming more of the case to a potential failed signal here. Just another nail in the coffin for the bears. Now, before I get too bullish in the markets, I just want to look at the objective data here on the charts, looking specifically at key technical signals here, like the double top. You can see that the level had hit dead on twice at that $25,000 level. Now, we can go back in history and look at key examples of this occurring. This is a fantastic example as it occurred 2019 and 2020 on a macro time frame here. And of course, the rest is history from that point after the breakout occurred. So we saw the top at around that $10,500 firstly in October, another top in February 2020. We had the pandemic crash. So the double top did work out in the first case, but we had a major triple top that failed and was basically the start of the breakout for the macro bull market in 2020. Now, I'm not saying that we are at a exact same scenario in 2023, where if we get this breakout, this is the absolute grand macro breakout, failed signal, and the market shoots off to 50 or 100 grand. But it's important to note what we could expect if this signal does fail, if the double top remains at these levels. And from this particular example on Bitcoin back in 2019 and 2020, you can see that the market came back up to that level here in May. And I remember this quite vividly as I was in the market, and you had a lot of bears trying to call for lower prices. At this stage of the market, there were still the calls for $1,000 Bitcoin, for Bitcoin to go back to these levels of $3,800 at the pandemic low, for going back to test $6,000 or $7,000. And I thought that could be an opportunity back at $6,000 or $7,000. But you can see that once this market began to hold up at these levels, the volatility reduced, which is another key indicator of these signals potentially failing in the near future. Then you can prepare for what if the triple top doesn't work out to the downside? What if we're about to experience a breakout to the upside? Now, there's plenty more examples across all charts, Bitcoin, stock markets, individual altcoins and stocks that this happens. So this skill can be used across all markets. But before I dive in any deeper, quick shout out to today's video sponsor, Verasity. Verasity is dedicated to solving the issue of fake video views with their patented technology of proof of view. It's powered by a mix of artificial intelligence and machine learning, two of the most popular narrative words at the moment. Don't sue me, Verasity. And it's developing an open access payments platform through Vera Wallet, Vera Card, and Vera Pay. I may subconsciously call my second daughter Vera after this. With this quarter's revenues, Verasity has bought back and burnt 50 million tokens, equating to about 500 grand. So I'm telling you this because they're after your help to get listed on Bybit. There's 100 grand reward pool and an extra 10 grand pool just for tweeting about it. Bybit's buy vote competition begins next week. Use the cast your vote link in the description to vote for Verasity and enter the prize pool of $100,000. Take a screenshot of the vote you've casted, go to the tweet in the video description and tweet exactly like you see here for your chance to win another $50 of the token. In no way, shape or form did I say buy the VRA token. This is simply a sponsored video from Verasity to help them get listed on a cryptocurrency exchange, which is also a partner of the channel. So if you want your chance to enter into the prize pool of $100,000 with Verasity and potentially get some sign-up bonuses with Bybit, use the links in the video description. We all know how boring adverts can be, so I hope that was entertaining. And if you do win, let me know in the comment section. Now, what if these signals actually work out and then fail? Well, that's obviously a possibility as well. But for the double top or the double bottom to actually work out, you want to see it break past the trough or the peak within the pattern itself. So as for a double bottom, you can see the two lows here, and there's the peak. You want to see the move out of that bottom, break past the peak. There's still plenty of good trading opportunity within the run up. But if that is to fail to break past the peak, then you increase the likelihood of the market dropping past that signal because it hasn't found the strength to the upside. A normal pullback is fine, and then a push again. But if it fails and fails again, you're probably going to expect that the double bottom signal will fail, and then you get a very good move to the opposite direction. You can see what happened here. We had the double bottom and the break past it. So there was still great trading opportunity when the signal worked out. But of course, we can see many times in history that the double top signal has failed. And looking back at the 2018, 2019 accumulation zone. This is a pretty key area that is being referenced right now in comparison to where Bitcoin is currently at in its pattern. You can see you had the double top, right here at around that $4,000 or so. You can see the peak was at 4,200. The market went sideways after a quick drop of about 9%. You can see from 4,200 down to the low of 3,600, and then it tracked sideways. And you can see the weakness in the double top signal start to form as we got higher lows on the swing chart, higher highs on the swing chart. You eventually get the breakout, and then that final last squeeze before the pump above. And that's what I was talking about at the beginning of the video when we're looking at liquidations here, the shorts getting absolutely screwed in this case, because they are trying to short every single time the market comes back up to the previous resistance level. And eventually they can't short any further, everything is done, and you get a big squeeze up quite quickly, which absolutely wrecks the shorts. The bulls get excited, and then we start to push higher and higher again. Now, some would argue we've already experienced that particular short squeeze, but we can always build up again and start to form more short squeezes, especially when the narrative is so bearish. Now, it doesn't mean it's going to happen. I'm not trying to say this is 100%, but it's something definitely to look out for, especially like we've seen with those other examples. If Bitcoin remains at these higher levels for an extended period of time and we don't get any sort of drops to satisfy the shorts or the bears, this is then going to build up a bigger pump to the upside. And you can see this pattern happen time and time again on the market. I've used the double top, double bottom scenario in this case, but you can also see the market try to go for a rejection of previous support, so becoming resistance. The bears could not take control any further, and then you get a slow grind before that short squeeze crushes the shorts. Now, I understand the bears can get quite sensitive, or basically anyone that is expecting the markets overall, the stock markets, real estate, and crypto to capitulate in 2023 to lower prices than the current lows are, so that I'm not offending them or triggering them. The same thing does happen at the tops. And this is where the bulls get extremely triggered, the same way that the bears are getting extremely triggered right now. The bulls at the top here, if you remember from the channel, we were looking at a level of $60,500 to confirm the uptrend, to confirm that the macro bull was going to continue. Now, at this time, a lot of channels were talking about 80,000, 100,000. I was on other channels where they were talking that, we were interviewing and they were expecting 80 and 100, and I was saying it's not going to happen unless we do break this particular bar here. So this is where the bulls get very triggered. You get the bull tears and the bears take control, because the same sort of thing happens here. You can see all the bulls trying to long and continue to long the market on higher and higher leverage, and then eventually the ass falls out of the market. You get quick bars down, you get the squeeze to the downside, and eventually they lose absolutely everything that they were hoping and dreaming for at the top. And as you can see, the rest is history. The cycle rinses and repeats. We ended up with a double bottom, and you could call it a triple bottom here as well, as the market hit the same price 3 times. A quick move away from those lows, higher low, and the market started to move to new highs from that point. Now, the pattern can come in all shapes and sizes, different time frames, like we saw back in 2017 as well. This is a period that I was in the market, and I remember this low coming in around $2,200. You can see the market move away. It failed, came back for a couple of low tests at $2,200 for Bitcoin, and then the signal failed, and we had a nice quick move to the downside. So if you're measuring these sorts of moves, these can be quite significant, especially if they are on leverage. Now, I'm not telling anyone to trade on leverage, but you can see why that they are so lucrative to some traders, because once the signal fails, the move to the opposite direction can be quite quick, quite fast. And if you've got a trading plan that you trust, then the move can be extremely profitable. As for the rest of us who aren't trading on leverage, then we can use these periods to identify where this market could be going. And so that's what we're looking at right now. As this market continues to hold up for the time being, this is also just putting a little more weighting behind the bull's case to potentially break this top. Obviously, in a couple of days from now, you got the up, down, sideways answer. If we start to break down from these lows at around 22,500, or even back here at 21,500, and again 20,500, then you'd have to say, well, the bears are back in control and we are dropping lower. So I'm keeping an eye on each of these levels that the market has given us. Our objective support levels, 20.5, 21.5, 22.5 to give us signals in the market whether this is going to hold up or if the bears are going to take control and finally get their day in the light. This is a key signal that I'm looking out for over the coming days and weeks, as I've seen it so many times in the past. Hopefully I've been able to deliver that to you and show you just how critical a failed signal can be to the market and give you that insight as to where the market is going next. Obviously, if you found value, smash up the like, subscribe to the channel, and in the video description, we have our free crypto and economic report, plus our TIA premium for members learning to trade and invest. Otherwise, enjoy your day. I'll see you over the weekend, and until the next one, peace out.